Today, we're going to take a look at a pitch deck or investment deck review for Trulieve, one of the huge multi-state operators, kind of take a look at what they're doing. It's big news for multi-state operators, being all the rage with investors and the stock market and all of that. So we're going to dive into it. Welcome back to the Talking Hedge. I'm Josh Kincaid, Capital Markets Analyst and host of your Cannabis Business Podcast. Today we've got Katrina Glogowski, angel investor and attorney, to take a look at this Trulieve investment deck. Katrina, thanks for being on the podcast.
Thanks, Josh. I'm looking forward to this one.
Yeah. So 7 tips to a successful investment deck is going to be the grading scale. Number 1, do they identify the business plan goals? Number 2, do they know their audience? Number 3, do they understand the market? Number 4 is, have they identified needs and roadblocks? 5 is if they know what sets the business apart. Number 6, did they introduce the team and product? And finally, 7, did they create a summary with a call to action? So with that, let's take a look at this Trulieve deck. Relief you can rely on. So this is an investor presentation from December of 2018. So not their most current, but we'll still be able to look back 23 months ago and see what they were trying to do. And we'll just judge them based on that. Company snapshot is 65% of all medical cannabis dispensaries in Florida. The leading medical cannabis company in Florida, the fastest growing U.S. market. Not anymore. California obviously is there. Vertically integrated seed to sale operation. That's kind of nice, just like Colorado. They have dedicated flowering of 119,000 customers. Recent acquisition of assets in Massachusetts and California, muchly needed. And then a profitable with a track record of growth.
Josh, I really like this statistic, dedicated and growing Florida consumer base of 119,000 customers. Those are, if they're saying those are repeat customers, that is very good news for an investor. And we like to see that type of analytic. We always pick on total addressable market, but repeat customers is a analytic that we are looking for. So good on them.
I don't know if I'm going to be that optimistic. I'm going to think that 119,000 is a number that they pulled out from the registered medical within either their area or their state. Now, I don't know. Well, I guess we'll find out, but I'm assuming that 119,000 people that are on a medical registration list is who their potential customers are. Don't know, but if that is, that's good numbers, but I'm not going to be that optimistic. All right, looking at their efficient, vertically integrated business model, they have cultivation and extraction, 500,000 square feet capacity that can produce almost 20,000 kilos annually or kilograms. Branded product developments, private labeling, medical grade cannabis consumer products representing 125 SKUs with retail sales to consumers through a network of 22 brick and mortar locations and statewide delivery programs. Obviously, right now with the pandemic, delivery is going to be key, because how else are you going to get a bud tender to recommend your brand? It's really going to be that delivery person to try and upsell you if they can. Don't know how that works really.
Right.
So cost competitive cultivation with high yield extraction. Again, the 500,000 square foot of cultivation and ongoing construction to add another 127,000 square feet that is already supposed to be completed. Current annual growth capacity, again, 20,000 kilograms, and a supercritical ethanol and CO2 extraction distillation process to produce concentrates.
Okay, they're sizable.
So 125 SKUs, that's quite a lot. I think we've kind of seen some brand concentration reduce, as I think we mentioned last week, Katrina, that, those chocolate covered espresso beans probably weren't selling the way you thought they would. Coffee is not a thing in Washington. You cannot buy grab and go infused coffee. It's just too expensive. It's not on the shelf at all. And then when you do find it in, Portland or down the I-5 corridor throughout Oregon, it's generally sold out. So There are maybe 125 SKUs, but how many of them are selling? Don't know. But let's take a look at the multiple concentration ratios and strains that Trulieve has, from nasal spray, oral syringes to capsules, flour, topical creams, tinctures, vape cartridges, shatter, and concentrate.
Well, at least they have real live products, Josh.
Yes, that's important. It's not an idea. It's not just looking for a license, obviously. They're publicly traded and have 125 real product SKUs, so that's good. So they've got the largest dispensary network in Florida. They keep kind of touting that Florida is their spot. They've got to have a good reason for that. I think it's an absolute horrible place to invest your capital. If you have other areas to go, I would go there personally. I just don't think that this is going to be an inexpensive place to grow when you're competing against, Canada at $6 a gram, or Colorado at $1.30, or was that New Mexico at $1.30? Regardless, there's other places that can do it for a fraction. And so if you have to go indoor to avoid powdery mildew, mold, some other issues, I just don't think that with national US legalization that Florida is going to be a spot where you're going to want to grow things other than citrus fruit. I don't think that a flower is going to be long-term viable in Florida.
I think Florida has a lot of problems that have yet to come to fruition.
Because honestly, if people are going to grow cannabis down there, they're going to do it in Puerto Rico for a 4% corporate tax cap. So there's no way that someone in Florida is going to be able to get away with spending 16% more. They just don't have those margins. So if you're competing against Puerto Rico, you're not going to win. So, and that's with, national legalization to go across state borderlines, of course. But they've got up to 23 municipalities here in Florida, calling it an efficient network, enabling a statewide home delivery service. But we'll see.
Well, this gives us some information about their 119,000 customers. Here they're saying 2,400 customers served in their store every day, and they have 23, 25 dispensaries. So that they might get to that number, Josh. That might be a real number, which is good for an investor to know.
Mm-hmm. So back to the state home delivery program, they've got a fleet of 65 delivery cars and a call center receiving 2,000 calls a day. Now, I'd like to know a little bit more about that. If that's product inquiries, like what are they doing? Because that's interesting. 2,000 calls a day. I don't know many dispensaries that actually get calls at all. People are either going in there in person or ordering it online. But that's interesting to me.
That is, and it might be how old this deck is, 2018. Maybe they hadn't built out their website yet, but I agree, it is an interesting number.
Mm-hmm. So back then, 10% of purchases were delivered. E-commerce were expected to contribute at least 15% of revenue. I'm assuming that's much higher now with, even though they're declared essential business, they're pretty much pushing everything for online orders to kind of speed that transaction up. So I'm assuming that's much higher now than it was pre-pandemic. So back to the 119,000 unique patients. Patients visit 1.83 times per month, leading industry education, outreach support for both patient and doctors with easy to use Find a Doctor tool with the loyalty program. So they say face-to-face contact so far in 2018 was greater than 600,000. So
Well,
maybe they do have 119,000 customers.
Yeah, they're starting to flesh it out as a real number. It's getting more and more valid, so that's good.
So some of their social media statistics, they've got Facebook and Instagram, Twitter. So kind of pushing 100,000 social media community there. And how they engage with their people through email marketing, it's about 70% customer opt in to email with 40% open rate. And then text messaging, also, I think that's probably a lot higher than it was back in 2018. There's a lot of discounts and deals you can get through text if you sign up for that. So I would imagine that's much, much higher now than it was just 23 months ago. So engaging with their customers, it looks like they have patient downloads. They got their own app with community events. Well, back then there were events. They were holding 20 to 30 events per month or being engaged with that many. So maybe they're just doing that digitally now. And then maintaining a leadership in Florida. So they're doubling down. I think since 2018, they've expanded, which was smart to not have all your cookies in one location.
Right.
So products, kind of talked about that, and their cultivation and sales, increasing retail dispensaries to 30 locations, as of last year with the home delivery network and same day delivery.
That's okay. Oh, here we go.
So finally, they're talking about expansion and out of Florida, which was a brilliant idea. Leveraging brand recognition and opportunities to deploy profitable and customer-focused business model. So in late 2018, so about 2 years ago, they announced an acquisition of assets in Massachusetts and California, and that kind of helped spur that out-of-state expansion.
Right. Which they actually did. So that's good.
Mm-hmm. Yep. So they got Leaf Industries back then and Life Essence in Massachusetts. So that kind of helped them get into California and Massachusetts with strong growth and margin profile. Looks like revenues, at least expected revenues were to reach almost 300 million by 2020. That was their expectation. Gross profit was going to be almost 68% by 2020. With an EBITDA, or earnings before taxes, depreciation, and amortization, to reach 43% by 2020.
Those would be excellent numbers. And projections are always nice. But with the benefit of hindsight, I wonder how close they got to these numbers. If they have a profit margin of 68%, that is truly impressive. And these are their projections. If they held out at 68%, I would really be very interested in investing in this company, because very few cannabis companies have a true profit margin of 68%. And even after EBITDA, a 44% margin is still massively impressive. And I'd be interested in looking at this company a little closer, Josh.
So I just pulled it up real quick on my phone, and as of first quarter 2020, the financial and operation highlights there's that 96.1 million for first quarter alone. So they budgeted, or they forecasted 290 million for the entire year. They got 96 million in the first quarter. EBITDA. Yeah, EBITDA, which is this last figure here, they were planning on earnings before taxes, depreciation, amortization to reach 126 million. First quarter, they reached 50 million. And then let's say, just give us gross margin, adjusted margin of 77%, higher than the 67% they anticipated. Strong cash positions equivalent of 100.8 million. So
just in the first quarter, that is
in the first quarter. And that had to be because they've expanded a lot more. So when they made this deck, they were just in Florida. They finally got into California, Massachusetts, but they blew that out of the water. They expanded much faster, probably because somebody told them that Florida wasn't the place to be in. They're like, okay, maybe we should expand. And it worked. And now they're one of the biggest multi-state operators, which is kind of why we're reviewing them. We reviewed MedMen, which was an absolute dumpster fire, but they have blown away the revenue and profit margins and EBITDA as of first quarter. These estimates are a third of the way there with, they can go 4x on that.
Josh, this is an important point for potential investors. If you can grab something out there that's a little dated, and we said this is from 2018, but these are projections, and this indicates the skill of the team involved with the company. And what we saw with your comparison of the current numbers with these projected numbers, not only did they meet these projections, they exceeded these projections. And for an investor, that really shows a competent team.
Yeah,
You don't
absolutely.
have this typical hockey stick, we're going to make $200 billion next year. No, you're not. And when you see something like that, that's a red flag for an investor. But when you have numbers like this, that especially with hindsight, you can compare, this definitely indicates a skilled team.
Yeah, and I would also say that look at MedMen. By comparison, 2 years ago, MedMen was all the rage. They got all the publicity and PR, and then now they're going through a complete reshuffling of their executive board, the board of directors, everything. And Trulieve, kind of no one really knew or heard about them as much as MedMen, but look at what they've been able to do. They've been able to accomplish more than what they set out to do, which you can't say the same thing for MedMen. So,
Right.
yeah. All right. Performance 2018 third quarter, kind of give us some numbers for total revenue and margin, but we've already gone through that and said that they exceeded that, looking at their expectations from 2 years ago to now, kind of blowing that out of the water. And so they give us some executive team. So that's good for our pitch deck review. They do give that to you kind of in the addendum or appendix at the very end. With the board of directors as well. So with that, let's bring up the 7 tips to a successful investment deck. Looking at number 1, did they identify the business plan goals?
Yes, they're talking about expansion to other states. While they didn't break down what their ask was or what their use of funds was, they did clearly state the use of the funds was going to be for acquisition and growth.
Mm-hmm. All right, I'll give them a full point as well. Knowing the investor audience, would you give them
I
a full
think,
point for that?
yeah, I think so. They had all the buzzwords, but they not only just did service to the buzzwords, there was content behind the buzzwords as well. I think they did a very good job on that.
Number 3, understanding the market. I'm going to give them half a point because there wasn't anything with competitors. They didn't mention MedMen. They didn't mention how much Florida is going to be an issue, but I guess we'll get that to roadblocks next. But I'll give them half a point for understanding the market because they really did focus on Florida without a competitive matrix. What do you think?
I agree. The lack of identification of the competition is indeed a real problem. Now, they did say on one of their slides that they, in 2018, held 65% of the Florida market. So maybe they just didn't have a significant competitor. But I think if you flash forward to 2020, I bet you they have competition now. So the danger, the investors call that barriers to entry, and what is the likelihood of a competitor coming in. And they didn't do that at all. So I agree, half a point.
I'm also going to go half a point on identifying needs and roadblocks. Number 4 on the 7 tips to a successful investment deck. They didn't have any issues with, wholesale pricing possibly collapsing. They didn't mention blight or, hurricanes or powdery mildew or anything. They didn't mention any problems whatsoever. Got to go with half a point. How about you?
I agree. I did not see a single obstacle in their pitch deck,
Yeah.
including going into other states. So they didn't even identify potential obstacles in other states where they hadn't even started yet.
Did they mention their secret sauce? Number 5, what sets the business apart?
That's a tough one. They did have a product slide in which they basically, again, I want to be clear, this was in 2018. And so they were throwing spaghetti at the wall with 125 SKUs trying to just saturate the market. And maybe some of those were sellers and maybe some of those weren't. But I didn't really see a secret sauce type thing outside of pure market saturation with the call center with multiple locations. with their app, with their website. But I didn't really see too much there.
In 2018, is it enough to say that having 65% of the market and having a call center and delivery and e-commerce options, was that enough to set the business apart at that time? At any degree, a quarter point, half a point, 3/4 of a point, can we give them any credit for trying to set the business apart circa 2018?
I think they get credit for trying to set the business apart. And I think having a call center and a website and a loyalty program are all pluses to get them to that half a point. But just because you have a fancy app with pretty colors doesn't mean your customer is going to come back. And so I like the statistics of their customers coming back. And so I'm going to give them a half point for that.
All right. And number 6, they did introduce the team towards the very end, and their 125, product SKUs or whatever, and their brand. Is that enough for a full point?
Yeah.
All right. And then in terms of creating a summary with a call to action, towards the end, they kind of just ended it. There was no ask, but a lot of these decks don't. So kind of have to take that deck by deck. But they did have some performance. I don't know if there was necessarily a call to action or even a summary.
Well, Josh, that might be some of the SEC requirements about soliciting investment, and so they don't want to run afoul of the regulations. So sometimes we see decks without asks. They did give a number, contact information for if you have if you want more information. I'll give them a half because their presentation on the whole piqued my interest. How much money they're asking for, how much they've raised to date. That can all be done in due diligence if I seriously want to invest in this company. But I would recommend for individuals, entrepreneurs, and established entities who are doing raises to actually have an ask. So, for example, if they're trying to raise $1 billion and the minimum investment in this company is $1 million, then you're going to waste a lot of time sorting through investors who only want to put in $25,000. So that would be my recommendation to individuals doing pitch decks. You should have at least some parameters of what your ask is, Josh.
Mm-hmm. I would agree with that. All right. Well, that leaves us with 5 out of 7 leaves. That's a 71%. It's not too bad. But Trulieve has got the money to definitely put together a decent deck and the time and the professionalism. So it's another one to use a pretty good template for if you are a multi-state operator or looking to be one or just a retailer, whatever. Definitely another decent deck to make a template out of. So 71% it is. All right. Well, I want to thank my guest, Katrina Glogowski. She's an angel investor and attorney in Seattle. Appreciate you being back on the podcast.
Thanks, Josh.
With that, we're going to roll this one up. I'm Josh Kincaid. This is The Talking Hedge. Don't forget to like, share, and subscribe, or don't, and I'm out. Don't forget to smash that like button on your way out and check out these other videos that we've got.